Hello, Theo traders. Today is the 23rd of July, 2024, and I am Gianni DePoce. I'd like to take you through some important charts in this market right now. We're seeing a lot of choppy price action. Stocks began this week with a bit of defensive posturing after last week's sell-off. The S&P 500 came within about 100 points of our upside target that we've been discussing at length in the $58,000 to $6,000 level. Now, we came back down and completed what appears to be another higher low with respect to the trend. So I'm not closing the door on the possibility of a rally up to the $5,800, $6,000 area. But what I am looking for is a rotation of leadership. If you take a look at the NASDAQ bore the brunt of the sell-off and it broke that ascending channel formation that we had highlighted previously. And it did so after satisfying one of our upside objectives in the $20,800, $21,000 area. Now, the key thing to understand when a channel, an ascending channel is broken, or really just any sloping trend line, especially the upside, is broken for that matter, is that it means that the rate of ascent in effect in the market is nullified. So, you had a pretty steep slope of climbing prices there for about 3 months. That slope is no longer in effect. So what we would be looking for now in the NASDAQ is for prices to consolidate and digest their gains. But I must admit that downside risks are elevated despite the possibility, the probability at this point of a Fed rate cut in September. Remember, even though that means more liquidity coming back into the market, it can also mean that the prospects for an economic slowdown are rising. And you're starting to see some laggard behavior in tech. XLK down a little bit today. Chips are outperforming to the downside. That is a bit of a cautionary signal. The top performing sector in the S&P 500 last week was energy, but it also is selling off this week. I'm not as optimistic regarding the prospects of crude oil and the energy sector, given the possibility of an economic slowdown. You usually don't see crude oil do that well when the economy is slowing. There is an inflationary type of rally in the late stages. You might see it outperform, but I think we might have actually passed that. And what we've seen instead is some notable outperformance by REITs and real estate. If you take a look at XLRE here and even VNQ, you're seeing some strength on that side. It's one of the reasons why we had traders pick up a long position on rocket companies as of late. Do have a target of around $20 per share on this stock. The home lending company is looking pretty good from my standpoint. If you take a look even at some of its competitors like LendingTree, you have some really nice setups. And that strength is also permeated over into the home building sector, which rallied to new all-time highs. So I think the prospect of rate cuts could be a tailwind for the real estate sector, which has been the worst performing sector year to date by far. If you take a look at bonds, you have been seeing duration lead to the upside here. I don't have really the best conviction, so to speak, in terms of significant upside. I think we could retest the highs from December 2023 best case, but once the Fed turns on the money printer again, guys, I don't think this period of low rates is going to last for long. So if you are shopping in the real estate space, you need to be ready to move in the next, let's say, 6 to 12 months, because I think that's when the window is going to be open the most. Let's take a look at precious metals. And most intrigued by the price action here. Gold and silver both trying to complete higher lows with respect to their trends. Silver did have a lower high completed here last week or 2 weeks ago, but it looks like we have a higher low in effect, and the names that we've been in for quite some time continue to be strong. Anglo Gold Ashanti, Agnico Eagle Mines, these are all looking good. Pan American Silver, wheat and precious metals, all displaying relative strength in this rather mixed tape. But I do want to circle back to the biotech index. Check out the relative strength. This index, the NYSE biotech index, is up almost 0.6%, while the NASDAQ and the S&P are pretty much flat. And a lot of the names that we've been covering in this space, Nurix Therapeutics continues to show some really strong performance. Myriad Genetics starting to really accelerate out of its base. Mirum Pharmaceuticals, these are all names that we've shared with traders in Theo Trade Chat. Protagonist Therapeutics up almost 7%, a big winner on the day. That is looking strong. Edgewise Therapeutics seemingly completed a higher lows. Twist Biosciences. So we've been all over the sector And the good news is that I think there's even more opportunities underneath the surface. I think we're still early in this biotech rally. And, every week I've been making the point of zooming out and showing you just where we are with respect to the longer term trend, because I do think we're early. I do think there's a lot of opportunity. And I think this could be a sector that drives some tremendous alpha within one's portfolio, assuming one is positioned properly in the coming weeks and months. So we'll be all over that sector, no doubt about it. You're seeing some selling across the board in crypto. Ethereum just had an ETF approval, so we'll see if that leads to a rebound here. I had a nice rally off last week, but some of the names in the crypto space feeling some selling pressure. MicroStrategy, that share split is coming up. I think it's at the beginning of August. Yeah, August 8th, you're going to have a 10-for-1 share split on that. Coinbase propping up pretty well. I like what's happening here, pressing up against resistance. Would be nice to see a little bit of consolidation. And of course, Hut 8 mining continues to hold up pretty well. I've also been long Jumia Technologies. That rallied to a new high today, but then started to see some selling pressure. I do have an upside target in Jumia in the $18 area. I think that still looks strong. And this is, again, considered to be the Amazon, the equivalent of Amazon for the continent of Africa. So definitely no shortage of growth opportunities there. But I do want to actually jump over to the currency market, because I think what's happening in the Japanese yen is noteworthy. Looks like a major reversal is underway as the rest of the developed economic world moves towards a more accommodative monetary policy. You're seeing the big sell-off in the euro against the yen as well. And whether you look at the Australian dollar, the Canadian dollar, the Swiss franc against the Japanese yen, you're seeing strong selling across the board. And I think that really speaks to the emerging strength in the Japanese yen. And, once upon a time, strength in the yen was associated with a risk-off market environment. And having looked at some of the sector performance rankings underneath the surface of the S&P 500, I do think that the currency market is suggesting that we are in a more risk-off environment. And obviously, the political winds are changing seemingly by the hour right now. And markets, during lame duck presidencies, which, we are now in for, better or for worse, tend not to perform as well. So leaving the door open for some choppy market action going into the end of the year. And I think we just need to focus on high quality setups and quality risk reward management, which, we do nonetheless. But basically, tech in time should benefit from lower rates. But, if you look at some of the big tech names, I like the price action that we're seeing in Amazon. That's encouraging. But let's see how we close the day. Seeing a little bit of selling there. I'm still a fan of Google. And then obviously, we've seen CrowdStrike blow up in light of that big tech outage, and that's affected Delta Airlines. Still, that stock's actually holding up all right right now, all factors considered. Microsoft, which was tied into that whole CrowdStrike debacle, also trying to complete a higher low. So hopefully that's coming to an end here soon. As again, there's no shortage of uncertainties and headline risk in markets right now. So just tread carefully. We're late cycle. Downside risks are elevated, and we'll keep you updated in the meantime. So I hope to see you in the Theo Trade chat room. That's all for now, everyone. Thanks for watching. See you next time.